Hey, good morning, guys. This is it's about 9:30 in the morning. It's August the 25th, and this is just an update on some of the counts, the euro, the pound, a couple of euro markets, and I'm actually happy to post finally for the first time in a couple of weeks actual losing trade. And if you remember from my past three videos from, I believe, Tuesday, Wednesday, and Thursday, I was short the euro. And I had this particular move here as a triangle where I had, this was the A, then I had the A, the B, the C, the D, and then I had the E ending here. And I was expecting price to move below the cloud. However, as you can see, price did not do that. Now, here's one thing that it's pretty much a lesson I want to give to anyone who's an Elliott wave trader or a trader period. The first one is you're never going to win 100%. That's just not going to happen. So I don't even want to spend but a few seconds on that. If you honestly think that trading is a no mistake game, then you're definitely in the wrong industry. What you want to consider is minimizing your losses, keeping them at a minimum, and maximizing your profits. So I'm pretty sure if you read a book on trading, one of the key to being a successful trader is to let your profits run and cut your losses short. So with that being said, prior to my new current count that I have, where I had the E here, my stop was right here. So I had my stop at 1830. I wasn't expecting price to go above 1824. Right here, it went above 1824, which already eliminated that particular. It already had eliminated it. The bearish triangle. Therefore, um, I was already stopped out before this spike kind of even went, to where it went, because it didn't really spike up like that. It just kind of continued. I got stopped out with roughly about an 18 tick uh, loss, basically. And what I did from there is I started to recount. Now, the thing about Elliott is you're going to be often wrong often more than you're right. So what you want to do is minimize your losses, and then when you are right, then that particular win would more than likely, it will supersede your losses. So if you had 8 consecutive losses and they're very small minimum losses, then you get one big trade that goes above 100 ticks or so. Then what you would do, that would actually erase your losses. And that's the kind of name of the game. And you just recount, and you get better and better and better as you continue to take your losses, because it forces you to recount your labels and redo your labels and to come up with a different count, a different analysis on that particular market. So now that I know that this is no longer the triangle going to the downside, I still have this as a bearish move. I still have this as this is the top of wave 3. Now I had to recount. So now I still have this as an A, I have this as a B, and after I have this as a C as a W. So now I have this as a double zigzag. Now I have an A, a B, and then I have 1, 2, 3 move for an X, or 1, 2, 3 possibly move down and one more move up for an X. I have my stop at 1910. As you can see, I am 11 ticks in the hole, but I'm testing it. I'm barely at I'm not even at a full contract. So this is how I kind of test things to see. I don't go in with a bunch of money up front when I don't know, especially when I just got stopped out or something. The last thing you don't want to do is put up $1,000 or $2,000 and you're not sure if your account is validated yet. So you kind of test it with something that you can actually, just test it with. You can even demo it if you like. And then what I do from there is there is a bullish alternative. This can be a B, C instead of this W. This can be wave 4. Now you can have 1, 2, 1, 2, 3, basically, and then you'll have a move down, and then you're working on wave 5, basically to the upside, which will go above 120, and that's basically showing that wave 4 is already done and it ended at 1664, and that could likely be the case. So a lot of times you never want to, this is pretty much a lesson video, you never want to be married to one count. Never do that, because at the end of the day, you're speculators. You're not going to predict anything. And Elliott wave, they're guidelines at the end of the day. There's no technical analysis or fundamental analysis out there that's 100% accurate, and there will be. But the thing about it is that you can make a living and you can make a career out of trading by being wrong 70% of the time. And I say wrong, not right. Being wrong 70% of the time, you only need to be right 30%, and you still can make a career out of this. So I never let losses get me down. It's all about your psychology. So keep that in mind, and I would like to incorporate that more into these videos, because you will see losses. You're going to see losses on a weekly basis, on a daily basis if you are a day trader. But you can't let that discourage you, as long as they're small losses. So you make sure that your risk versus your reward is within your means. And I'm actually glad that that happened, because then I can post it, and I'm going to post it. I don't care if I lose $5,000. It doesn't matter. I want to post it so that people can see that it's real, that you can see that this is just not a YouTube video to just to get subscriptions, just to just post something out there. It's really, I want it to be educational as possible. But on the flip side of that, I'm not a teacher either, so it's very difficult for me to teach Elliott wave, but I can answer questions, and I can actually guide you to becoming a better Elliott wave trader. But if it's something that if you're in the beginning stages of it, I can help, but I'll be honest, I will not be able to teach like that. I can do the best I can, but I won't be able to teach. So going forward, and let me get away from this market. I do have this as wave X. It still could push to about 1900, so I have my stop at 1910, and will expect if the market does go down, then within the next 2 to 3 hours of the Jackson summit, when Yellen speaks, when the Fed Chairman Yellen speaks, I'll expect this to come down. If not, then it will be the bullish alternative, and prices will continue. I'll take another stop, another loss, and I'll just come back to this market at a later date. I'm going to move on now to the. I'm out of this trade, but I just wanted to show the pound versus the dollar. Now here, I actually took my profits at 127.74 Samaria. I think I put my stop around right here. So I ended up taking about 100, give or take about a little over 100 ticks. I remember I rewarded, and I did call, I believe on Wednesday or Tuesday, 2 days ago in the video, that for those of you who are into counter trend trading, this will be a great opportunity for a long position, for a long scalp or a long swing. And look what happens. If this was the 5, this is A, B, C. So this is wave 4. This is 3, A, B, C, 4, 5. 1, 2, 3, 4, 5, or 1, 2, 1, 2, 3. And then you're going to see 4, 5 for A. And then you'll see probably a B here, and then you'll probably see another C that's going to go above this particular top. If that's the case, I will actually call. I want to see the B retrace this around 50%, roughly 0.618 in that area, and then I will take that move, wave C of this particular move, before I actually jump back in to the downside for the for a long-term trade. But if you did take that, that's, if you even took it here on the second attempt at 27.94, it's at 28.87, so that was nearly 100 ticks. And I did call this just about 2 to 3 days ago. I just didn't take it because the move is to the downside. And I always like to see wave A's in action, and I'll take wave C's once wave B has pretty much completed. That's just my method of trading. And although I did know that it was going to do that, Didn't like I knew 100%, but although I did expect price to move like that, you have to learn what type of trader you're going to become, and you have to stick to your methodology. Don't just take trades just because you know the market is going to go in a direction. That's how you take a lot of losses, and you want to do that. I did that in my earlier days, and I'm not that type of trader anymore once I realized the style of trading that I want, that I would like to do. So let me move on from there, and I'm going to go to something positive, and that's the CAD versus the yen. As you can see, on about a half of a contract, I'm up 179 ticks. I have this is the top of wave C on a weekly. Even if I look at my monthly for long term, I actually, oh, this is yearly. Not going to do anything with that one. But on a monthly, I basically, you could just see this as a long term. I had this as a 1, a 2, a 3 here, a 4, a 5. Now you have the A, B, C. So the complete cycle was finished here. I have a 1, a 2, a 3, a 4, a 5. Or this can be an A, a B, a C, a W, a X, a B, a C for Y. And then you have 1, 2, 3 basically going in that direction. You can look at it two different ways. Either way, for the short term, price still definitely appears to be bullish for the, I guess you could say, the short or the immediate term future. So, which is why I'm expecting price. I'm already up 181. I got in at 85.71, as you can see right here. I have my stop at 86.97. So I already got 100 ticks locked in, which is, if I refer back to my Euro trade, as you can see, I lost 18 ticks. I'm down 12 or 13 ticks. Do you honestly think that I look at that when I'm in one trade up 100 ticks, 180 ticks? Not necessarily, and that's what happens. I normally get in between 3 and 5 markets at a time, and you're gonna lose them. You're gonna lose a couple of them. Big deal. It's do never get emotional over a losing trade. That's actually how you learn, and that's actually how you become a winner. So if you could take that advice from that, um, that's basically the best advice I can give you. So I am expecting this market to continue. The problem I'm only having is that it could come back down and get close to stopping me out before it actually goes up. So Sunday or next week, Monday, when I post this chart again, I'll go down to a daily into a smaller time frame to try to get a better accurate of what this is doing, just in case anyone wants to jump in this market for the opportunity. Because if all in all, if it does continue to do what I do, whether it's A, B, C, or 1, 2, 3, price does appear to be going to around 94. It's at 87. So there's plenty of opportunities to get into the long side. So let me continue. There was another the Eurocad. So I'm down on the Eurocad as well, and I was up probably around 60 or so ticks last night, and then this particular move went up. I am still looking at this as a bearish, and I have my stop at the top at 148.75. So I'm still a good 50 ticks away from my stop, and I'm still expecting price to move to the downside. It happens like that sometimes. I don't look at it. I just recount. I still have this as a 1-2-1-2 count with prices going to the downside. So I'll look at it and go from there. And I think next week I'll probably look at try to do a better count on this dollar versus the yen. It's been this here. I hate this little pattern here. It's one of those difficult to where you don't know exactly what it is. If I had to looking at it from a larger standpoint, it honestly just looks like this is a A of 2 or a W of 2. This is A, B, C, and this is the X of 2. And now you have an A, probably a B, and then you have a C of Y, which is basically showing that the dollar will be getting weak, become a little bit more weaker versus the yen, and it will probably come down to around 106 or so from 109 before the dollar continues to get strong. That's just from the look of it. As again, I wouldn't know for sure, so I'll take a look at that on another one. I think on the Aussie, I do have the Aussie going long, and if I'm not mistaken, I am up on this trade a little bit. I don't know how much, but yeah. So I did go in small. 137 bucks is what I have so far, minus a few for the commission fees. I mean, I got in at 78.78. It's at 79.33. So let's see, 80, 20, about 50 ticks or so that I'm up on that. So it's a decent trade, but I am expecting it to continue up. If it comes back down, I'll add on contracts and go from there. And last but not least, if I have anything else to show for today, you know what? I think I'm eventually going to jump back in the Euro Aussie. I have this is a 1, this can be W, this can be X. I actually had this is A, B, C for 2, and this is 1, A, possibly B, and then maybe a C for 2 would come down to about 146, but I'm not sure. I actually got in this market on a long term at I believe about 138, and I took it all the way from 138 to 150, about 150, somewhere around there. It was literally 1,200 ticks. It was the largest profits I had ever taken. I actually have a video on that a couple of months ago as well when I first started this video, and it was funny because Elliott Wave International, they have a Currency Pro service, and they had this market coming to about 130, 130, 140 or so, and then going down. I had this as an end of wave C. They had this as like a 1, 2, 3 going down. I was looking at it like, that doesn't look right. I was talking to a guy who runs Cynics FX, I believe that's the channel, and we were discussing that. And I mean, it's all in video, so it's not like I got to lie or anything, but go back and just look for a Euro Aussie and you'll see. But yeah, that's just enough of that. I'm not bragging or anything. I just thought it was pretty funny that someone who charges $300 or $400 a month for a subscription service had this market to the downside, and people probably took it, and you paid to take it to take a loss. So I just thought that was pretty humorous to me that people pay $300 or $400 a month for a subscription service. You're paying that money for what you think that people are professionals, and then all of a sudden you jump in the trade and you still lose. So this is kind of why I wanted to do this YouTube channel, just to build a community of Elliott Wave traders, and we hold ourselves responsible, and we take trades based off of what we think we have our analysis correct or not, but there's no blame at all because we understand trading. So I'll let it go on that note. Hopefully someone did take this particular move up. Just to recap on this euro, I'm expecting price to move down. That doesn't mean it won't, because this can be 1, 2, 3, and prices will basically, this will be the 4 instead of the W, and now you'll expect wave 5 to go above 120. So I'll keep an eye on it, and I'll be back either Sunday or Monday. You guys enjoy your weekend, and happy trading.